Okay, the next indicator we're going to talk about is the channel, and it helps us to avoid certain areas on the chart. The strengths of it are identify choppy, sideways, price action. I'm sure you can do that already. Additional confirmation for trade setup, high probability trade setup when price moves outside the upper band. Use as profit target. Use for short-term currency price range. Recalculates. The weaknesses are it recalculates, so it looks better on price action. So when you go look at price action, it's like, oh man, this is great. But every indicator has its strength and weakness. So I just wanted to bring that out. Unreliable during strong up or downward moves. Looks messy on lower time frames. Okay. So whenever I go to my charts, I have this on all the time, this indicator, because I don't want to trade in the middle. I'm looking for open space. You've probably heard that term. I'm not sure. But basically it's the space in between where price hasn't been in a long while. So this is open space. This is all open space. And so if I go to my charts and price is sitting right here, it's not a bad area. I would prefer it down here. But if price is in between these two bands, I don't trade inside of it. Ever. Ever. Because that's how I filter out the noise. It helps me filter out good trades and bad trades. Also, there's two different bands on here. This one's set at 2.0, the other one's set at 3.0. If you leave it at 3.0, you're going to get high probability trades, but you get fewer of them. If you put it at 2.0, you'll get more trades, but less quality, if that makes sense. If you go back on your charts and just examine it. Also, each currency pair moves moves a certain range. Not like a daily range. All these currency pairs that we're looking at are 1 hour, because how I trade is usually if you get a 1 hour candle, you'll get consecutive 1 hour candles right behind it, and it'll be like a short-term move. So what I do is it's about 50 pip range in between these two candles, in between the top band and the bottom one. And on the other one, for your other currency pairs that move a lot more, this one's about 80 to 90 points. 50 points is good for me. 40, 30's not bad, but it gives you kind of an idea of the range of this currency pair and what it could possibly move, if that makes sense. If it does move. I use it as a profit target if price comes down into it, and I stack the other indicators together, and it's just another confirmation. So one of the things is unreliable during strong move. If we look at this move right here, it's way outside. It just doesn't look right, and you'll see that it becomes unreliable, and you have to use another indicator in order to place a judgment or a decision on whether you're going to get in or not. And that's basically it for this indicator. I have it on my charts. I prefer three lines, one in the middle. I don't like this little gap in between. It's either the 2.0 or 3.0, but that's just preference because I'm particular on like aesthetics and how things look. But the main thing is it helps filter out the market noise. I do not trade anything in between this, and I'm looking for open space that price hasn't been in a while, and usually get a reversal. It's not 100% It's the markets, they can be unpredictable, and price always has the final say. And that is it for this indicator. Thank you.